Assalamualaikum. Hi, I'm Anisrati Bidyayu. I would like to present the topic about personal financial statement and budgeting. Personal financial statement is the statement of the current individual financial status, including the details of the assets that you own and liabilities that you owe, and also the personal cash flow statement measure your cash inflow, that money you earn, and your cash outflow, that money you spend, to determine if you have a positive or negative net cash flow. This is essentially how you manage and plan your savings, expenses, income, investment, and other personal financial activities. A personal balance sheet summarizes your assets and liabilities in order to calculate your net worth. Budgeting is personal financial tools that allow you to estimate how much you can spend to ensure balancing between income and expenses. Firstly, it will create awareness and responsibility, because nowadays people are surprised to see how much money is going to things that are not important to them, such as dinner out, online shopping, entertainment, overspend to utilities, and so on. So, by using personal financial statement will lead to be more aware of your spending habit and your net worth. Second is, it will allow you to make a financial decision ahead of time. This makes it easier to cover all your expenses, along with paying off debt, saving for the future, and being able to afford fun expenses. Thirdly, it will help you to achieve financial freedom from worries about your financial health. By avoiding burden with increasing debt, monetary emergencies, excessive consumer spending, and other problems that keep us from reaching our most meaningful financial objective. And last but not least, it will help you to establish clear financial goals. For instance, if your goal is to limit your expenses and save more money, then keeping your track of your daily expenditure is one way to achieve this. Having a personal financial plan will help maintain discipline towards maintaining within a set target and thus achieving the set goals.
The first step is we need to review the current financial situation and identify all the commitments that need to pay with money. We need to look at all of the expenses. Then we have to highlight all the regular expenses and also highlight the irregular expenses. This is important because we can categorize all the costs and try to minimize the unnecessary expenses. The next step is to set short-term and long-term goals. It is important because setting solid goals will give direction and clarity when making decisions about finance. The goals will show us everything if we are moving in the right direction, but make sure the goal is realistic and possible to achieve. In step 3, we need to create plan for the debts. We need to remember that we can't make a big progress with the short or long-term goals if we need to pay all the debts with high interest. So, we need to create a plan to settle down the debts that can bother our goals journey. In step number 4, we need to make budgeting because it can help control spending, track expenses, and save more money. So, make sure make budget before spend money. Then in step 5, we need to establish the emergency fund to protect us from unexpected conditions, because there is always the possibility that some unexpected cost will come and make us to spend money. Next step is to start investing to increase saving so that we will be more prepared for the future. There are many types of investment that we can involve, and one of them is investing for retirement. We need to have retirement plan to make sure that we have enough saving to use for the rest of our life. In step 7, we need to get insurance planning to defend our cash from any unforeseen risk. Having the right insurance means that we won't need to constantly break into our saving every time something goes wrong. For instance, home insurance means that we were properly protected from the things like natural disaster. The last step is we need to track our plan to monitor our financial conditions improvement. We can check in every 3 months or less than 3 months and make sure we are moving in the right direction. The first first negative effect of having no personal financial planning and budgeting is we will have no saving to use in the future. This is because if we don't have a proper personal financial plan, we will not bother to save money and spend it without thinking about what will happen in the future. Not only that, we also tend to overspend and buy unnecessary things. This is because if we don't have a proper personal financial planning and budgeting, we will spend more than usual and also buy unnecessary items. The following negative impact is the debt will increase and will be challenging to manage. When we don't have saving and spend too much, we will end up having a lot of debts. For example, outstanding payments of the credit card. We will be stuck and difficult for us to handle the debts. The last negative impact is losing our financial control and leading to stress. If we don't have a proper plan for our own finance, we will end up hard to control the outflow and inflow of our money. So from that, it will lead us to stress because we have a lot of obligation that we need to be settled. That's all from me. Thank you.
Assalamualaikum and a very good day everyone. My name is Amira Natasha binti Buhari. Now it's my part to talk about insurance planning. Do you know insurance planning is important nowadays? Once you start earning and there are family members also depending on you for their well-being, from there the importance of insurance become clearer. Life can be too unpredictable at times, but it can be immensely helpful to be prepared in terms of money. As we all know, insurance is a way of safeguarding against financial loss. Also, it can be defined as the transfer of risk by an individual organization known as the policy owner. Insurance can be in two terms, which is in terms of conventional and Islamic. Conventional insurance is based on commercial factors and also subjected under government laws only. The capital of the premium insurance is invested in funds and investment channel which are not necessarily Sharia compliant. Furthermore, conventional insurance has elements of interest, gambling and uncertainty. The next part is type of insurance. What insurance will we need? Of course, there will be many type of insurance we need and we want to apply, but I will only explain the basic of life and general insurance. Life insurance is a contract between you and insurance provider. This happens when you promise to pay the nominee of insured a sum in exchange for a premium upon a death of the insured person. This insurance will make sure if an individual dies, the family will be compensated by the insured amount. This can secure the family future financial even the individual is already dead. The next is general insurance. General insurance is non-life insurance cover for damage or loss. It includes products such as vehicles, travel, pet, health, and home insurance. The tangible assets are susceptible to damage and a need to protect the value of the asset is needed. For this purpose, general insurance products are bought as they provide protections against unpredictable tragedies like damage and loss of the asset. It can be anything that have high values. It also gives you peace of mind during loss and cover major portion or total loss. That's all from me. Now I will pass the presentation to the next presenter. Thank you.
Hi, Assalamualaikum. My name is Nurul Fariha and I will continue the presentation. So, do you guys know what is Islamic insurance? Actually, Islamic insurance is also known as Takaful. Takaful is a Sharia-compliant insurance option which is grounded in Islamic muamalat products, which explains how individuals are responsible to cooperate and protect one another. Takaful insurance companies were introduced as an alternative to those in the commercial insurance industry, which are believed to go against Islamic restrictions such as riba, al-maisir, which is also known as gambling, and al-gharar, which is outlawed in Sharia. However, despite being based on Islamic principles, Takaful is not a religious product and it is available to everyone, including non-Muslims. Next, we move to the types of Islamic insurance. There are two types of Islamic insurance, which are Family Takaful and General Takaful. Under Family Takaful, it provides Family Takaful, which provides both protection, policy, and long-term savings for you and your beneficiary, with financial benefits if you are suffering a tragedy. The second one is Investment-Linked Takaful. Investment-Linked Takaful is a Family Takaful plan that combines investment and Takaful cover. Your contribution gives you a Takaful cover which includes death and disability benefits. Other than that, medical and health Takaful is also covered in Family Takaful. Medical and health Takaful gives you cover for the cost of private medical treatment like hospitalization, surgery, and treatment if you are diagnosed with certain illnesses or are involved in an accident. And the last one from Family Takaful is Child Education Takaful, which provides you with protection and long-term savings to finance the higher education expenses of your child. The plan will provide your child with financial benefits if your family suffer any setback recovered under the plan. The plan also gives your children long-term savings or education fund that your child can use to continue his or her studies in the future. Move on to the General Takaful, we have Home Takaful. There are two types of Home Takaful, which are the House Owners Takaful and Householders Takaful. House Owners Takaful covers your home against loss or damage caused by floods, fires, and other such perils. It is not only protects our house, but also the garage, outbuildings, walls, gates, and fences around the property, as well as permanent fixtures and fittings. Meanwhile, Householders Takaful covers the loss or damage to the contents of residential property. Next, it is a Motor Takaful. Motor Takaful covers against loss or damage to your vehicle due to accidental fire, theft, or accidents. And the last one is there is a Personal Accident Takaful. Personal Accident Takaful is an annual plan that provides compensation in the event of death, disablement, or injuries arising from an accident. Therefore, it is important for you to have insurance planning because it can support you in times of emergency. As a human being, we have no idea what awaits us in the future. Unexpected tragedies such as illness, injury, or death can put you and your family through a great deal of emotional turmoil and even lead to feelings of grief. In that time, your finances may not be able to cover everything at that point. Therefore, insurance planning is always there to assist you during unexpected situations. Insurance planning will assist in paying for medical emergencies and hospitalization as well as future treatment and care for any illness or injury. Next, insurance planning can protect you and your family. At first, it is just you and your partner, right? But as time goes on, you will be joined by more and more members of your family. It is natural for your family to rely on your financial support to maintain a comfortable lifestyle. As a result, your financial commitments will rise as well as the number of family members increases. So, the importance of financial planning as well as insurance planning in order to protect your lovely family is also important. So, in the event of an unexpected financial crisis, it could protect the people in your life who mean the most to you. Furthermore, insurance planning can also encourage you to make savings. Along with normal coverage, many insurance policies include savings and investing options. This aids in the accumulation of wealth or savings for the future by making frequent investment. You pay premiums on a regular basis, with a portion of the money going toward life insurance and the rest going toward either a savings or investment plan depending on your future objectives and needs. You, as a parent, must also play a wise role. You must instill the discipline of saving, not just in yourself but also in your children by encouraging them to save their money. Last but not least, we need an insurance planning for a better future. Insurance coverage can assist in ensuring your child's educational future. Even if you're not around, they will ensure that your children are financially secure with pursuing their passions and ambitions without compromise. Therefore, your child's future will be more secure if you make insurance plan from the beginning. You and your family's life will also be more efficient because the money for your children's education, if he or she goes on the university, is already there. So, that's all from our group about personal financial statement and budgeting and also insurance planning. We hope that all the information that have been shared will be useful for all of you in the future. Thank you and